Hello guys, it's Max here from Daily Market Movements, and today I thought I would do a video dedicated to all of the gold traders out there. I just want to start by saying gold is by far one of my favorite securities and assets to trade due to the fact it just makes sense from a technical perspective and a fundamental perspective. Gold, to me personally, I just find it to make sense. You know, you have so many other assets out there, such as forex pairs and other commodities such as crude oil sometimes, which always you see false breakouts occurring and just movements that just don't really match from a fundamental and technical perspective. So gold is by far one of the easiest and most simplest assets that you can trade out there. So if you are a new trader, I would definitely focus and start off on trading commodities such as gold. So what I'm going to be showing you today is a tool that I use every single week. It's probably one of the most important tools that you can use for gold. However, nobody knows about it. That's right, nobody knows about it. You know, luckily for myself, I have my Signal team where I'm able to communicate and talk with so many of my clients. And you know, gold by far is one of the most popular videos that I post. You know, on my daily videos where I analyze the markets. Gold is by far the video that gets the most amount of views. Hence, I get a lot of clients who subscribe to my Signal services who trade gold and gold only. And it shocks me to find out that no one, and honestly, I mean probably 99% of the traders that I talk to haven't got a clue of this very, very important tool that you guys should be using to trade gold. But before I go on to tell you more about this amazing tool that I use to trade gold, I just want to show you this amazing hat I've just received from traderscreed.com. As you can see, it says swing trader, and you know, this hat is just such good quality. I'm really happy with it. I've actually ordered some t-shirts and jumpers, but they haven't yet arrived. But when they do arrive, I'll be sure to show you. But honestly, check their website out, guys. Traderscreed.com. Really nice stuff on there. You know, you've got hats as well with the Japanese candlesticks and loads of other cool trading quotes. So definitely check them out. So as I mentioned before, back to gold markets. There's this tool that I use on a weekly basis, which helps me predict which direction the market will go, whether it be to the upside or the downside. So just a bit of theory behind this tool. For those who don't know, you have people in the market called market movers. And these are people such as banks and hedge funds. You know, these guys have such large sums of capital which they're able to trade with due to their large client bases. You know, I'm talking billions of dollars. You know, someone like myself, for example, if I bought some gold tomorrow, like $1,000 worth of gold, it's not going to move the market. It's just not enough money to shift the market at all. However, these banks and hedge funds who are investing, let's say $100 billion, $10 billion into gold, this is enough money to shift the market. And that's sometimes why sharp declines or sharp increases in the market occur. These are hedge funds and banks opening and trading certain positions. Now, why am I telling you this? I'm telling you this because it's extremely important that you're on the right side when it comes to trading. And by that, I mean you want to be on the same side as the hedge funds and banks, the market movers. If you can be one step ahead of the hedge funds and banks, or even just ride the wave with them, you will make a lot of money, because you do not want to fight them because they've got so much money, they will destroy you. So that now leads me to the next part of this video. I'm going to take you over to my computer now, where I'm going to show you exactly how you can find out how much net long and net short positions hedge funds and banks and just general managed money hold. This is a great tool to use, because this just allows you to know what the managed money companies are thinking and their outlook on the gold market. So come with me and I'll show you how to get that report. So here we are over on the computer screen now, and just before I get started, I'm just going to explain a little bit more about this tool. So what is this tool? This tool is basically a report. It's a weekly report which is released every Friday by the CFTC, which is a government-run organization in the United States of America. And what this report is, it basically shows you how many net long and net short
positions managed money firms hold. So this is a great tool to use to have an understanding of what direction and what attitude these big managed money firms have towards a certain commodity, just like gold. So first of all, we're going to start off on how to find this report. So here we are on the Daily Market Movements website. You're free to come here, and here we have the economic calendar. So if you click on the economic calendar, it will then take you to the calendar itself. And if we just scroll down, so this report is actually counted every Tuesday. That's when the numbers are counted, and then the report is released on Friday. So the reason that so many traders don't know what this report is and have never heard of it is because by Friday evening, most traders are done for the weekend. You know, they can put their feet up and relax. But little did they know, one of the most important reports of the week is actually released on a Friday evening. And also on the economic calendar, you know, you have these balls which represent the importance of this report. From my perspective, this report is extremely important and very beneficial. However, on the economic calendar, it's only been given a medium importance, which is a bit underrated from my perspective. So as you can see at 8:30, just before the market close on a Friday evening, we have all of these data points. And as you can see, we have something called CFTC Gold Speculative Net Positions. And this is what we want. You know, here it is. It kind of explains what it is. It's, you know, with regards to the report, but it doesn't give too much away. So now I'm going to show you how to actually find this report. So what you want to do, you want to come onto your internet browser and just type down cftc.gov. As I mentioned before, it's a government-run organization. So just once you've typed down cftc.gov, it will then bring you to this website. So CFTC stands for Commodity Futures Trading Commission. And then once on this website, you want to come down to where it says Market Data and Economic Analysis. And then furthermore, 2 points down, we have something called the Commitments of Traders. And that is what you want to click on. Once you've clicked there, it will then bring you onto this page here. And then what I want you to do is just scroll down, and then eventually you will come across this report here, this little table here. And as you can see in the bottom, we have metals and other. And this is what you want. You want to click on long format. So once you click onto the long format, it will bring you onto this page here. Now, I know you're probably looking at this page thinking, oh my God, it's very confusing. Trust me, it's actually really simple. So as you can see in the top left-hand corner, we have the asset that it is covering. So here we have palladium, here we have platinum and silver. And then here we have gold. And this is what I'm interested in, gold. So as you can see at the top four, we have different types of so we have different category of individuals. So we have producer, merchant, processor, user. We have swap dealers. We have managed money. This is what we're interested in, the managed money department. And we have other reportables. But as I mentioned before, managed money is what we are looking for. And as you can see, it says long, short, and spreading. And we're only interested in two categories here, which is the long and short positions. And as you can see, there was 153,961 positions currently net long held in gold from managed money firms. And as you can see, we have last week's count on May the 12th, 2020. And this number here is the most important figure that you're looking for. We can now see that managed money firms have increased their net long positions by 9,946 contracts, which has now added to the total of 153,961. So from May the 12th, you can see that managed money firms have actually added to their net long positions by adding a total of just under 10,000 contracts. They've also added to their short net positions. However, as you can see, the long positions outweigh the short-term positions. So this is a very bullish sign for gold. This means that managed money firms are adding to their net long positions. This probably, to me, tells me that they have a bullish outlook for gold. So this is how you can use these type of reports to your advantage. Now you're probably all thinking, Max, it's counted on a Tuesday, but the data comes out on a Friday. That is the catch with this report. There is a 3-day lag. So you might see that it might be counted on Tuesday, and then from Tuesday to Friday there's been a huge rally in gold, and then you then look at the report and you can see that the managed firms have actually added to their net long positions. You may jump in on late on the Friday evening, and then on the Monday you might see a decline in the market. Basically meaning that the market has already priced in this, and as you can see, the market has already rallied before the report has been released. Yes, this is the only downfall from this tool that you can use it for gold. However, what you want to look for is a week where gold, for example, it's been counted. So let's say this week was a perfect example. Gold was trading at 1740 on the Tuesday. This report was obviously calculated, and on Friday it was then released. But what gold did throughout the Wednesday, Thursday and Friday, it actually stayed around that same price level of 1740, and this is what you're looking for. You're looking for a kind of flat price movement. So this week was a perfect example, because now this tells me that managed money firms have added to their net long positions compared to last week, but gold really hasn't moved upwards. So this to me tells me that there's a great opportunity to now make money. So I would now be a buyer of gold because I'm on the same side as the hedge funds, as they are bullish for gold, adding to their 9,446 contracts. So I hope that this tool can help you with regards to trading gold. Also, you have swap dealers. I'm not really interested in the swap dealers, other reportables, but just in case you are, you can come back here onto that main site. If you scroll up a little bit higher, it kind of tells you, it kind of gives you a Word document, as you can see here, where you can scroll down, and it kind of explains the whole report. You have, it kind of summarizes the different types of categories of people. So it is definitely worth a read, as it is very interesting to understand.
So guys, there you have it. I've just shown you on the screen how you can use a CFTC report to your advantage, so that you know which direction the managed money firms are trading, and you can use this to your advantage to predict what direction the market will go to. So I hope this video has been really helpful for you, and you've learned a lot. I've got plenty of other tools just like this one, which I would like to show you and teach you. So if you did like this video, guys, please give this channel a subscribe and give this video a thumbs up. Thank you for watching this video, guys. If you have any questions, please leave a comment below this video. Thank you, guys.